Welcome to another stage analysis video. It's Wednesday the 1st of November 2023. I'm going to start off today by going through the major indexes before having a look at the short-term breadth and the recent watchlist stocks in a bit more detail. Shorter video today as it's the midweek video. I'll get into a lot more depth at the weekend, but just want to cover what's been going on in the early part of the week, as we've seen a small change of behaviour at the moment with a few rally days, and today was what's known as a potential follow-through day in the Nasdaq. At least the S&P 500. It's a little bit early as it's only day 3 of the rally attempt at the moment, but we have seen obviously a strong move over the last few days. The percentage of stocks above their 20-day moving average here starting to break back out from the lower zone. When we start to see this kind of move down here, what we want to see for a change of character is we want to see it moving immediately from the lower zone back towards the upper zone. If it starts to top out in the mid-range, starts to roll back over again, and obviously the downtrend has got more chance of continuing. But if we do see a strong breadth thrust to the upper end here, then it gives us a little bit more confidence that there's a potential change of character and there might be a trend change underway. So it's still fair way below its +1 ATR level here at the moment, and still below the 21-day EMA, the 1-month moving average here, and the 200-day moving average it topped out at today. So just coming back into the channel, but it's a little bit of obviously a capitulation type move in the short term here. It was a little bit short term extended, got all the way down towards its -3 ATR level here before making the rebound. Obviously, without getting back above these moving averages, it's still obviously well within this downtrend channel here. So we did see a slight change of behavior yesterday with the breadth triggering the short-term breadth here, the 20-day moving average EMAs move into bull confirmed status yesterday, so before the follow-through day today. So on this move up here, I did highlight that in the post yesterday with the point and figure charts of both of those, as they're both Nasdaq 100 and the S&P 500 both reversed out from double top breakouts in the lower zone on the P&F charts there. So that saw obviously a strong follow through today, which is good, but we're still obviously not out of the woods yet convincingly. Obviously, percentages of stocks above their 20-day EMA is only at 37.2% still, so a little bit underperforming compared to the S&P 500 here. You obviously when this gets back above 50, the 21-day EMA, you want to see that back above 50% at least. So we look at the equal weighted chart here, you can see that is lagging a little bit here. It's still got a ways to go to get back to its 21-day moving average, and it's been a strong decline in that over the last 3 months. Obviously, with still a good distance to get back to that 50-day moving average above. It's still 4 to 5% below the 50-day moving average on the equal weighted chart, but percentage of stocks above their 200-day moving average is up to 34%, so rebounding out of the lower zone. Potential bull alert signal on that if you look at the point and figure chart of that. So which we see across the board with the S&P 500 moving average breadth. We've got bull alert on the long and the medium term, and on the short term it moved to bull confirmed status. So some changes of behaviour, but obviously need much more confirmation from those. Nasdaq 100, obviously with the cancelling follow through day attempt today. So this moving back up to its 21-day moving average today. Percentage of stocks at 39% at the moment above their 20-day moving average. So again, similar to the S&P 500 there, underperforming a little bit compared to the index here is outperforming compared to the equal weight. So with it back up at its 21-day moving average here, we would expect this to be up at the 50% level. So still got a little bit more work to do there. And if you look at the equal weight, you can obviously see that it's still only just back at that -1 ATR level, still well below the 21-day moving average and its 200-day moving average. So on an equal weighted basis, it's still only a rebound in early stage 4 there, but on the major index, it's still in stage 3, and it hasn't obviously made a move below its 200-day moving average. So while it's still in this downtrend channel, there's obviously a short-term change of behavior going on, but in order for that to turn more positive, we need to see it get back above the short-term moving averages here, the 21-day, the 50-day, and the 1 ATR level, which we consider, once it's above the 1 ATR level, that it's in a short-term uptrend there. So at the moment, still in what we consider the neutral range between the +1 and the -1 ATR levels there, with the percentage of stocks above their 20-day moving getting stronger. But we need to see that, obviously, again, breadth thrust up into the upper zone in order for a clear change of character there and for a potential trend change. If we look at the Russell 2000, also only a minor turn at the moment. This has been the major laggard, obviously, year to date. So you had a big fall off from the most recent highs back in July there. So it came off over 18% there, and obviously only a very small rebound so far. Still well below the 21-day moving average, but again, slight change of behaviour. Percentage of stocks above their 20-day moving average there. So this is done using the S&P 600 small caps, not the Russell 2000. So we don't have the data for that, but that's a good proxy. The S&P 600 is at 36.83% at the moment. Again, if we want to see a change of character, we want to see a breadth thrust back up towards the upper zone again to show obviously that this trend is potentially changing. But at the moment, just a very small rebound so far. We look at one of the more speculative ETFs as well. Just wanted to cover this off as well. It's been obviously had a very negative time of it over the last 3 months or so. Did have a strong start to the year. Obviously was well up at its highs. So we go all the way back to 30th of December there, and look, it did obviously manage to rally over 60%, but it's come off obviously a long way since then, dropped off over 30%. Now, at the moment, only a small rebound and still well below its 21-day moving average, which is still declining, and 50 days still declining, and 200 days. So these are in the wrong order as such. We want to see obviously price action above the 21-day, the 50-day, and the 200-day in this stacking order like we saw back in early June. So we need to see a strong reversal of this in order to turn more positive on this. But if we can start to recapture the 21-day and start to build out, then obviously that would give some short-term confidence. But at the moment, continues to underperform since back in mid-September there. Move on to the VIX. You can see there's a big change of behaviour in the VIX over the last 3 days here, back below the 200-day moving average today on the close. So that's a positive sign. So in a really neutral position currently, we need to see a lot more improvement in this to turn more positive. Breaking these two swing lows back here would be a good sign. Obviously a major pivot through that area in the 16. So if it starts to break back down below there, then potentially would start to turn towards more positive behaviour. But at the moment in this kind of range, it's in a neutral zone at the moment, but definitely obviously showing signs of improvement there.